Welcome to your Crypto Weekly Recap. This week is all about ETF Greenlights and bold forecasts. Let's dive in. First up, the U.S. Securities and Exchange Commission approved new generic listing rules for spot cryptocurrency and commodity exchange-traded products on major exchanges like NYSE, NASDAQ, and CBO. According to Reuters, this slashes down the process to list new spot crypto ETFs, removing the requirement for bespoke filings under Section 19B. Speaking of ETFs, meme coin-adjacent names are now in scope. The SEC's updated rules could enable spot ETFs for assets beyond Bitcoin and Ethereum, such as Solana and XRP. Meanwhile, SEC Chair Paul Atkins said the agency will start notifying firms of technical violations before taking action, aiming to bring more predictability and fairness to crypto regulation. Glassnode reports that after expectations of a Fed rate cut, or easing, Bitcoin stabilized above roughly $115,200, with about 95% of supply in profit. One big voice this week, Arthur Hayes, co-founder of BitMEX, predicted that Bitcoin could reach around $200,000 by end of 2025, driven by increased liquidity, bond buybacks, and macro tailwinds. On the more cautious side, some analysts warn that while the regulatory changes are positive, profit-taking and weak spot inflows could cap near-term upside. According to Glassnode, Bitcoin's supply in profit is now around 95%. That suggests most holders are profitable, but also that if price drops, many are at risk of loss. Meanwhile, options markets are heating up. Open interest for the September 26 expiry is near 500K BTC, a record level that could amplify price swings. So, to recap, the SEC streamlined spot ETF listings, opening the door for funds beyond Bitcoin and Ethereum like Solana and XRP. Arthur Hayes even called for 200K Bitcoin by year-end. On-chain, 95% of BTC supply is in profit, but with a major options expiry ahead, volatility could rise. That's it with our weekly recap. Thank you for watching, and we'll see you next week.